Seriously, Labor has got to dump its Treasury spokesman, Jim Chalmers. He's been humiliated. I mean, fair dinkum, how can anyone trust his judgment on anything when he's been proved so wrong by today's fantastic unemployment figures? Unemployment dropped from 5.5% in April to just 5.1% last month, to the same unemployment rate we had in February last year before the pandemic.
What these numbers should do is give Australians confidence that there is light at the end of the tunnel. These numbers should give Australians confidence that the Morrison government's economic plan is working.
As it happens, this big fall in unemployment is exactly not what Labor's Jim Chalmers predicted, this opposition Treasury spokesman who wants to run the economy if Labor wins. In fact, let me show you part of a long video he made to boast 3 months ago, to boast about his forward-seeing vision, saying the Morrison government's decision to end its massive JobKeeper subsidies back in March, this would throw huge numbers of Australians out of work.
Next week, Scott Morrison and Josh Frydenberg will cut JobKeeper for 1 million Australians.
If you cut JobKeeper, you cut jobs. It's that simple.
The wage subsidy is coming to an end.
People's livelihoods could end as well.
Nearly 10,000 businesses could shut up shop.
Up to 150,000 jobs lost in as little as 2 weeks' time.
No government which truly understood what was happening in the suburbs and towns of this country would be cutting JobKeeper at the end of this month.
Honestly, that video goes on for what, 2.5 minutes, making this claim. In fact, the exact opposite has happened. More Australians in work than ever. So who now doesn't truly understand the economy? Joining me is someone who does, Australia's top finance writer, Terry McCrann from the Herald Sun. Terry, thanks a lot for your time. Look, the jobless figures
Andrew,
today, what did they tell us?
Well, as you say, Andrew, they're great news. They're very good news. I might say in starting, though, that Jim Chalmers wasn't exactly on his own. Federal Treasury was also predicting back then that there might be 100,000 jobs lost when JobKeeper ended. So it's the experts sometimes get things very badly wrong. So it is good news. It's great news. More people are in jobs. And not only that, the participation rate rose as well. So more people came back into the workforce looking for jobs as well. So very optimistic. The challenging part about these numbers, Andrew, is that they bring forward the chance that we're going to get an interest rate hike. Now, we're not going to get an interest rate hike anytime soon, but the Reserve Bank has been promising not to hike interest rates until 2024. That's 3 years into the future. I think very clearly in the wake of these numbers, you can expect rate hikes to happen at least in 2023 and probably in 2022. Now,
both of us, and your opinion counts for 10 times more in economics than mine does. Both of us were saying at the budget time last month that there was a risk that interest rates would go up, inflation would go up faster than the government was predicting only a month ago. Now, how serious is that, given I think a lot of people are probably mortgaged right up thinking, interest rate lows are so low that I can do anything. And the fact that we have got the biggest budget deficit in the country's history.
Well, I'm not going to go through the roof, Andrew. We're not talking about interest rates going up to the sort of levels that we grew up with, and certainly not even the sort of levels we saw 2 or 3 years ago, 3, 4 or 5% for the official rate, and a mortgage rate of maybe 4, 5, 6%. But clearly, the level of rates where they are now is totally unsustainable. And the other side of this equation, which people tend to forget about, is that it's terrible for depositors, because depositors are getting zero on their deposits, and that's fundamentally unhealthy, the way we've had virtually free money for borrowers, but not paying depositors who actually provide the funds at the end of the day. These are the people that have saved. These are the people that are not spending every penny they've got, and they've been getting zilch on their deposits. So it's an unhealthy situation, and I actually see it as a very positive shift if we do get at least some positive interest rates for both depositors and somewhat higher for borrowers sooner rather than later. I think it will lead to a healthier economy.
I think a more moral economy in some ways, Terry, because savers have not been rewarded for being prudent and keeping something for a rainy day. I mean, you're a fool to keep it in the bank. This is just
well, we obviously want this balance.
We
obviously want this balance between people spending money, which creates demand and creates employment, creates business activity, and we also want people who save because they fund the investment that we need. They fund the creation of the jobs in the really very basic sense.
Now, does this good news today? I mean, this already the budget just a month ago looks completely out of whack now. Just you may as well throw it away. All its predictions. Does this mean that yesterday's decision to lift the minimum wage by 2.5%, which is closer to what the unions wanted, further than how little the employers wanted, 2.5%, maybe not that bad after all?
Well, I think I don't really think anybody can quibble with that wage rise, which was $20 a week. I mean, $20 a week is not exactly the sort of number that's going to be whoopee for the person that's getting it, and very few people actually operate on that minimum wage. Yes, I think it's probably slightly negative in terms of the job opportunities for people who actually do operate at that level, casual workers, people at the very low end of hospitality and so on. But the bottom line is it sort of fits in, as you say, Andrew, with the dynamic of the economy now, which is much more positive. Now, having said that the dynamic of the economy is much more positive, I'm talking to you from Victoria. You're on the other end of this conversation, also in Victoria, and we don't know what the Victorian government might yet do to throw a spike into this good news for the national economy. Premier Dad is coming, or should I say Chairman Dad is coming back in a couple of weeks. He'll be fighting fit, and we know that he loves lockdowns. So, I put that caution in here about the optimism that we don't know whether Victoria is going to put a spike in it, as they did last year, as we know only too well.
Look, suddenly you've wiped the smile from my face. I can't go on, Terry. I've got to close it here while I dissolve in a flood of tears. Thank you so much indeed for your time, Terry McCrann.
Andrew.